Hello and welcome to today's NinjaTrader Ecosystem webinar event with Steve Rhodes of Mastering Probability. My name is Tiffany and I am a platform representative at NinjaTrader. I would like to mention that it is important to understand that there are substantial risks in trading commodity futures, contracts, and forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and can even incur losses beyond these amounts. Please inquire at the link provided. For more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply educational in nature. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage directly at the information provided. The NinjaTrader ecosystem website is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools and services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and on-demand video archive to view event recordings at the link provided. For up-to-date information, be sure to like or follow NinjaTrader on all social media accounts. I've added both our Twitter as well as our Facebook link within the chat. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and pick up a free live data trial, please visit the following link. You can purchase or lease NinjaTrader at the following link. And if you're just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We are very excited for this unique event in which Steve will demonstrate the patterns that have been present before the beginning of every bear market going back to 1896. Thanks again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Steve. Take it away, Steve.
Okay, perfect. So I'm Steve Rhodes, and thanks for that great introduction, and welcome to this afternoon's workshop. What I'm going to share with you today now are the exact tools that I use for market timing. There's a organization called Timers Digest. They track about the top 100, 150 market timers from around the globe. 2018, I was the market timer of the year. 2019, just slightly out of that. And that doesn't make me special. What is special about today are the NinjaTrader tools that I have created that you're going to see. So for those of you that use the application, you can just simply repeat what it is that I do. So it's going to be a great workshop. Let's begin. I want to go through my legal disclaimer here. Trading the securities such as stocks, options, indices, currencies, and futures involve risk and should not be undertaken without due diligence and serious independent study. Options, stocks, currencies, and futures trading involve substantial risk. Subscribers and attendees of this workshop may carry out their own trading based upon what they learn from this workshop hosted by me, Steve Rhodes. However, all risks of potential financial losses are the subscribers, the attendees' responsibility. Steve Rhodes will be in no way liable for financial losses resulting from trading decisions based upon this workshop or any other advice, past performance, no guarantee of future results. Reproduction, whole or in part, is not permitted without prior written consent. Copyright 2020, all rights reserved. So today I'm going to share with you the exact tools that led me to becoming the #1 market timer. And if you've got questions, feel free to go ahead and post them. What I'll do is likely after the half hour or so in going through this process, we'll come back and answer those questions. But feel free to go ahead and punch those into the system. So I'm going to share with you the exact tools that have led me to become the #1 market timer. In 2018, I was #1 for the S&P 500, as well as Treasury bonds. And what we're going to do is we're going to start with a blank chart. Basically, it looks like this. And we're going to add a few of my tools that will provide us with the message of the market. So we'll even go ahead towards the end. We'll take a look at what to anticipate or expect overnight for the futures, for those of you that trade the equity futures out here. And the tools that we're going to take a look at today that I'm referring to, one is the RMI pattern. That stands for Rhodes Momentum Indicator. The second pattern, we're going to look at the TD9 count. We're going to incorporate Japanese candlesticks into this process. We're going to look at what I like to refer to as Stevie's green and red line. That's the oscillator on change line. And we'll take a look at TD9 breakout, support, and breakdown levels out here. So education is absolutely the key to success. And I love teaching others. So let's get right to it. So I found perhaps you found this as well, that there's really two primary ways to learn something. The first way, and the most common way, is the technique called trial and error. Those of us that have grandkids or young kids out there, we see that when a child begins to walk. It's all about trial and error. Nothing wrong with that. The second method for learning is to find someone who's already achieved the success that you're looking for and emulate them. If you study the right role models, you can learn in a week what might otherwise go ahead and take you a decade. And when it comes to market timing, I'm proving that the tools we will explore today led me to being named the Timer Digest Market Timer of the Year. A question from Daniel, what was the return back in 2018? It was 40%, 140% of the S&P 500 out there. So that answers your question. Back in 2019, it was 131% of the S&P. You can see here I finished just a few percentage points out of first place. Again, it's these tools. So this is not about me. This is really about these tools in the NinjaTrader application. On January 9th of this year, as a matter of fact, I kicked off the NinjaTrader 2020 ecosystem event, and the workshop that I gave them was titled Preparing for the 2020 Bear Market. Just 23 trading days before the beginning of the 2020 bear market. And it was these tools that we looked at during that workshop that were generating that signal for us. Now, from a background perspective, I'm a bean counter. I've been an accountant, a CPA for over 30 years out there. Now, I didn't really use that as my profession. My profession, I was owner operator of retail stores at Walt Disney World, Disneyland, all the Disney parks, all the Universal parks, and other tourist areas around the world. My two primary products, I used to have a product where I would put your face on somebody else's body, turn those into magazine covers, movie posters. If you've traveled, you've probably seen those in many locations. And then back in 1999, I developed a process where I recreated 2- and 3-dimensional images inside solid blocks of crystal and opened up the first location at Epcot Center to celebrate the Y2K, which just seems like just yesterday out there. And also I'm a financial talk show host. I do a recorded podcast each day. It's distributed through tfnn.com. In fact, if you type in today's date and you put in Steve Rhodes and the Trader's Edge, the name of the show is the Trader's Edge, you'll see today's video. There's thousands of videos, our videos, that you can see. My contact information, I give this out to you. You're welcome to use it. You can contact me at steve@masteringprobability.com. My Skype address, steve.rhodes94. And my cell phone, 407-383-3100. Just please use that. Respect, I'm on the East Coast. And pretty much I shut things down by about 7 o'clock at night. So if you disrespect normal hours, feel free to reach out to me by any of those means. Now, to time the markets, I use the following tools. This is really important. Now, tracking the global flow of capital is one of the most important, fundamental, even though we're going to take, and then really technical aspects of trading. It's something that most people don't take a look at, but you'll take a look at it after understanding how this impacts what the markets are doing. I took the Rhodes, we're going to look at the Rhodes Momentum Indicator patterns as they identify tops and bottoms. We'll look at the oscillator and change line. This is the long short line that every trader must know. We track TD9 counts, so we'll go through that. That's part of the Tom DeMark system. And those TD9 counts provide us with resistance and support levels. They're really wonderful. You'll see them in action out here. And then we always use Japanese candlesticks to confirm patterns. They're not to be used on their own. They're really to be used in combination with pattern recognition. I'm really a pattern recognition trader. Now, I know there's got to be a few of you out there saying to yourself, Steve-O, wait a minute here. We don't have enough time to master these tools in a 30-minute segment. And you're absolutely right. And that's why I'm providing you with the ability to access 9 separate 1-hour workshops that cover these areas, and it's for free during the next 2 weeks out there. So if you're looking to improve your market timing and you're willing to learn, I'm willing to teach you. So let's begin by looking at the global flow of capital. Now, global capital is continually flowing from one economy to another. It's searching for profit, and it's searching for stability, financial stability. So picture in your mind this global, this big, huge ball of capital that is just floating around the world. And what it's looking for is confidence. It's looking for stability. And what it wants to do is it wants to park those assets where it can find that type of stability. The trends from one year to the next, from one day to the next, can change in a heartbeat. As international capital flows, they're always evaluating taxation, always evaluating inflation, always evaluating geopolitics, financial security, we touched on that, foreign exchange, and the cost of labor and interest rate differentials out there. Now, the advent of the floating exchange rate, that's one factor above all that provides the primary source for volatility and capital flow movements. We must always think in terms of how an instrument is priced in all major currencies. This is, if I was going to get you to understand one concept, one fundamental and one technical concept, it is that the true definition of a bull market is a market that rises in all forms of currency, not just one, like the U.S. dollar. You and I were trained to only take a look at what's the Dow trading at in terms of U.S. dollars or gold or light sweet crude. You've got to, this is a one world market. And so we have to incorporate, how's the Dow? How's gold? How are T-bonds? How are any of these instruments trading on the desk of somebody who's trading in terms of euros, yen, and pounds out there? And the U.S. dollar makes us the four core currencies that I evaluate, that we take a look at. So this set of charts, here's a visual for you. This set of charts shows you the Dow priced in U.S. dollars. That's on the left-hand side. Next to that, you can see the Dow priced in euros, and next to that, the yen, and then in pounds. Now, if you take a look at those red arrows out there, those represent, now you'll see that most markets, most instruments will top at the same time in all major currencies out there. So when we take a look at the arrows, the red arrows, they're identifying the 2007 top priced in U.S. dollars. Just focus on just that left-hand panel screen out there. Now, as we start to move to the right-hand side, you're going to see the Dow priced in euros. What I want you to notice is that here, if you take a look at the Dow priced in dollars, we can see that there was a real breakout that went on as soon as price took out the 2000 highs. Here are the 2000 highs out here for the Dow in euros, and you can see they never made it up there. So what that was telling us is that not that the breakout wasn't real, but we didn't have that real bull market where everything was rising. There was no breakout from a bull market standpoint because the Dow had never made it beyond the 2000 highs priced in euros, nor did it do it priced in pounds. It was in yen. That is not what you're looking for when you're looking for a bull market. You want to see everything rising. And from a breakout level, it has to take out those prior levels of resistance out here. Now, the Dow topped in all major currencies as in 2020 out here. Now, this has changed slightly this week because of the big move in the Dow on Monday. Now, when I put together a workshop for the folks here at NinjaTrader, because all these slides need to go through quality control, they're done a couple of weeks ahead of time. So the charts we're looking at here, most of these charts were done a few weeks ago, but we'll be able to spend a little time, take a look at the current charts and see exactly where we're at. But since the March 2020 bottom, the Dow is not made a new all-time high. Well, again, the chart patterns have changed just slightly. So what I want to do is I want to really come back to this when we go ahead and take a look at the live chart. It'll help you understand in perspective exactly where we're at and what we're looking for. Now, one thing that I did want to make mention is that so 2020 is still setting up to potentially, the bear market may not be over. So I want you to understand that, and you'll get a better flavor for this as we go through these charts. Now, we may not be able to make that final decision until the end of the year, and you'll see why. But it's very possible that a top is formed with a 2-year decline to follow. Now, you may say to yourself, Steve, how did you come up with 2 years? So here's going to be morsel number 2 that I'm going to share with you. This is going to be something that you'll be able to use forever out here. And the answer with regard to the 2 years is provided by you and I taking a look at the annual chart. So each of these bars here, this is a yearly chart for the Dow. And this takes us back to 1896. My data goes back to 1896. And here what we can see from 1896 to 1960, the Dow experienced 3 2-year corrections. So you're looking at the red numbers. It's showing you the number of years of corrections out here. So we had 3 2-year corrections, 2 3-year corrections, and 1 4-year correction. So if a major top is formed, we should see a minimum of a 2-year correction. Could be beyond that, but that's where the 2 years came from. Now, if we go from 1960 to the present, the Dow's experienced 2 more 2-year corrections and 1 more 3-year correction. So since 1896, the Dow has experienced 5 2-year, 3 3-year, and 1 4-year correction. So if there's a major top, my conclusion, based upon history is that we'll see a move lower into 2022 out there. Now, the one thing, and this is really important, the one thing that can get in the way of any kind of bear market, any kind of major correction out there is absolutely the global flow of capital. Remember, capital is always comparing the forces of taxation, inflation, financial security, geopolitics, foreign exchange, and it's always looking for where it has the most confidence. And confidence is absolutely the key. Every economy is built on confidence, and global capital will always seek those areas out where it has that highest confidence level. Let me give you some examples. Here is a table that measures the performance. So you'll see ROC. ROC stands for rate of change. Many of you in NinjaTrader application, we've got the rate of change tool out there. So this table measures the rate of change of various worldwide asset classes in the major currencies, the US dollar, the yen, the Great British pound, and the euro since March of 2009. Again, this was a snapshot from probably about 2 weeks ago. But what I want you to focus on, how do we know where the global flow of capital has concentrated? If you take a look at these charts out here, we're taking a look at the Dow, the DAX, the FTSE in the UK, the Shanghai. We're looking at gold. We're looking at treasury bonds. We're looking at the currency pairs. I've got the S&P out here. We've got the Nikkei in Japan, the Hang Seng, emerging markets, West Texas Intermediate Crude. I've got wheat. I've got Goldman Sachs commodity indice out here. When you take a look at these rates of change, it is clear where global capital had parked its assets. It was inside the U.S. When you take a look at the U.S., the U.S. performance in terms of those other currencies, the euro, when this chart was posted, was up 467%. Way outstripping the performance of the Dow in U.S. dollars, which was 380%. Heck, in pounds, it was up 505% during that time period. This is what the global flow of capital looks like when it concentrates itself into one specific area out here. And it's sort of subtle. It's an area that people don't pay attention to, but this is the true definition of a bull market. The performance of U.S. stocks, stock market, as I mentioned, was even better in euros and in terms of in euros and in pounds out there. This table here measures the performance of different global ETFs. So I've switched this chart a little bit because many of you may not have access to those indices out there, but you would have access to the ETFs. So here I'm taking a look at the ETFs representing the majority of key countries around the globe out here. And this is since the March 2020 bottom. So the message here is that global flow of capital hasn't really concentrated itself in any one specific area. If we take a look at these percentages, a similar percentage for the Dow as it is for in Canada, as it is in China. So see, there's really been no concentration of capital since that March 2020 bottom. Here, take a look at again. Here is March of 2009. Clear depiction of where global flow of capital has moved to. Here we come from the March 2020 bottom, and it has, based upon this table, and that as a start date, the global flow of capital has not reached the U.S. Now, this table is measuring the global ETFs from the September 24th, 2020 bottom. And the same message at this stage here is that there's really no concentration of capital. We were off to a beginning of it, but if I show you the updated chart, you'll see that there has not been a concentration of capital yet in the U.S. out here. I believe that there will. I truly believe that there will. But the question, and we'll have a really good feel by the end of the year, if not sooner. Now, as I mentioned, one of the most important tools is thinking in terms of everybody else around the world, the global flow of capital, how are instruments trading in those currencies? And if we do that, you're going to have an edge over other traders. So what have we learned so far? We've learned there's two primary ways to learn something: trial and error, model someone that's produced the results that you're looking for. Understanding the bigger picture, the global flow of capital, is key to understanding where's confidence? Where does that big ball that's floating around the globe, where does it have confidence? Where is it parking itself? International capital, again, always evaluating taxation, geopolitics, financial security, foreign exchange rates, the cost of labor, interest rate differentials. We've also learned one method for identifying capital flows is to look at major instruments priced in US dollars and also converting those to yen, pounds, and euros. Corrections in the Dow typically last 2 to 3 years, and that's based upon taking a look at history going back to 1896. So let's go take a look at the Rhodes Momentum Indicator. Now, this pattern has been present before the beginning of every single bear market since 1896. Now, the Rhodes Momentum Indicator is a 5-step process for identifying tops and bottoms for every instrument and every single time frame. You know, the worst trading advice that I ever received was buy low and sell high. Yeah, the worst trading advice. Buy low and sell high. I know in theory that makes sense, but in reality, how do you know when a bottom is formed? This is the weekly chart for the Dow. It shows plenty of buy low opportunities as price moved lower into March of 2009. So how did we know which low to buy? This is really important. And how do we know which high to sell? Well, when the Dow topped in 2007, and when it bottomed in 2009, it formed what I refer to as the Rhodes Momentum Indicator pattern. They're identified with these black diagonals. Now, I've automated this system, so if you sign up for the workshops, you'll get 2 weeks worth of newsletters, you'll see these charts here. You'll see different time frames. These signals are automatically drawn in my NinjaTrader application. Again, RMI stands for Rhodes Momentum Indicator. It's a 5-step process. It identifies tops, it identifies bottoms, and it's the pattern that's been present before the beginning of every bear market since 1896. Now, this doesn't mean that a Rhodes Momentum Indicator signal or pattern is present at every top and every bottom. Instead, what it means is that when these patterns are present, a top or bottom is more likely to form. So, for example, when the Dow produced a bear market correction in 2000, 2007, 2018, it was the Rhodes Momentum Indicator pattern that signaled the top. The 2015 Dow consolidation formed a Rhodes Momentum Indicator pattern as well. Really cool pattern, real easy to understand, and I take you through the entire 5-step process. For an RMA top or bottom to form, price must be moving higher with less relative energy, less relative strength, or lower with less relative weakness. And the indicator that we use to determine that strength or weakness is the relative strength indicator. But price is moving higher with less relative strength. Those are the red arrows out here. It signals a potential Rhodes Momentum Indicator top. Now, the confirmation of a Rhodes Momentum Indicator top occurs when a bearish reversal candle forms. Really key. Using Japanese candlesticks are a wonderful tool. They are a more wonderful tool when you use them in conjunction with pattern recognition, such as the Rhodes Momentum Indicator system, and maybe any other pattern that you use out there. You want to understand your Japanese candlesticks, both your bullish and your bearish reversal candles. Now, there's 13 bearish Japanese candlestick patterns, and there's 2 neutral. The 2 neutral candles are the doji and the high wave candle out there. And there's also 13 bullish Japanese candlesticks. Now, I've done an archive workshop. It condenses decades worth of knowledge into 1 hour. In this workshop, I cut through all the noise and I teach you just simply what it is that you need to know. I get right to the point out there. And I guarantee you that I could not be a world-class market timer. I could not have been the #1 market timer without combining Japanese candlesticks with my patterns. So that is definitely something you want to go ahead and take a look at. And it's a workshop called the Ultimate Trading Signals, Japanese Candlesticks. It's available if you become a member of my my newsletter service. And again, you're going to get access to that for 2 weeks for free if you'd like to learn these tools. Now, when markets form tops, it's not that first high that matters. It's the second high, and it's the relationship between time, price, and its actual relative strength out there. When markets form bottoms, it's not the first low that matters. It's the second low and the relationship between time, price, and its relative weakness. Now, the first high I'm referring to for a top is a high associated with the highest relative strength index reading above 69. If you take a look at this little red arrow here on the left-hand side, you'll see that that marks the highest relative strength reading. Now, at 10:30 in the morning on December the 12th, the 30-minute ES Mini generated an RSI reading of 83.54. By 6:30 that evening, the ESI was trading above the high generated at 10:30. So you can see it's trading above the high, but it was doing so with less relative energy, and therefore generating or creating a Rhodes momentum indicator signal. But it's not until we get that bearish reversal candle that confirms the top for this time frame. Remember, this is a 30-minute time frame. Price moving higher with less relative energy, as I mentioned, it's only a problem when you get a bearish reversal candle out there. So let's go through and review this 5-step process. The 5-step process that forms a Rhodes momentum indicator top, and the opposite would be for the bottom, but if top, process begins when that relative strength index closes above 69. Step number 2, we wait for at least a minimum of 5 bars to form after that highest RSI level is achieved. In other words, when there's a divergence and it's on the next bar, that doesn't qualify. We wait for 5 bars. The reason is because I backtested the system over the years, and that produces the best results. Now, on step number 3, on bar 5 or beyond that, the divergence signal line is when it gets drawn as price continues to move higher, but not being confirmed by a higher relative strength index reading. Step number 4, we wait for a bearish reversal candle. That identifies the potential top. And step number 5, which we haven't yet discussed, I'll briefly mention it, was we look for a close below the oscillator unchanged line to confirm that top. The exact opposite are the 5 steps that form the RMA bottom out here. That is that the process here begins when the relative strength index closes below 31. Step 2, again, we wait for 5 bars before we get our first signal, if we do get a signal. Step number 3, on bars 5 or more, we start drawing that line, or it gets drawn automatically when price moves below the low of that low that was established with the lowest RSI reading. However, price moves lower, but the RSI starts to move higher out there, setting up that divergence. Step number 4, a bullish reversal candle is what's going to signal a potential bottom out here. And step number 5, a close in price above the oscillator and change line confirms bottom. As an example, I'm just going to pull over a chart here. Just going to go kind of offline, so to speak. When I say offline, let's take a look at the ES Mini this afternoon. So as the ES Mini is moving lower, so this is a live chart right now. Now, this has got a number of my tools out here. Some of them we won't get a chance to talk to today. But if you subscribe to Mastering Probability, you'll get access to these tools as well. But what I want you to notice here is you can see now the ES Mini on a 30-minute basis formed 2 bottoms this morning, this afternoon, coming into the close. The first was the TD9 count. We haven't gotten to that, but we'll review that shortly. And the second was a Rhodes momentum indicator bottom signal. This red line here, that's the oscillator and change line for that time frame. So that was signaling a bottom formation. As soon as that Rhodes momentum indicator signal gets triggered, tells you to be on guard and to be watching. So there's a Rhodes momentum indicator signal working for the 30-minute time frame for the ES Mini. Now, I've got an archive workshop, how to spot and avoid the next bear market. Now, it walks you through in detail the 5-step process that you can begin, and it'll walk you through the process you'll be able to begin looking for and trading that pattern. As I said, it works for every instrument, and it works for every time frame out there. So, and the way that you would do that for this 14-day free trial, by the way, is you go over to Mastering Probability. I probably should have had something like that open. And you'll see the 14-week, or you'll see the 14-week free trial. It's over in the right-hand side. And in fact, let me just pull up the Mastering Probability website here. Give me just 1 second. And that way there's no confusion out here. And what it's going to do, it's going to just, I'll take you through this here real quickly. So you get to Mastering Probability, just click on the risk-free 14-day free trial. It's going to it'll give you some descriptive information. And here it tells you about the 14-day free trial. Once you hit the subscribe button, what's going to pop up, and it's going to take you through the newsletter is serviced through tfnn.com. And what you'll see here is you'll see a monthly, a 6-month, and a yearly price out there. Just choose the monthly out there, or choose whatever you'd like. But I would say just choose the monthly as the option. It'll take you through the information out there. And the normal cost of the newsletter service, by the way, is $149 a month. So to just get all of your information, it will go ahead and ask you for a credit card, but that credit card will not be charged. And on day 13, if you decide not to, you don't need the additional education out there, you just simply can go ahead and I cancel the service, and you won't be charged for a single. You won't be charged a single penny for all the information that you're going to receive. So I do hope that you'll take advantage of that. Now, the Rhodes momentum indicator pattern out here. It had signaled before the 1987 crash, so it was already warning the bulls before that. 1929 top was formed with Rhodes Momentum Indicator pattern. Again, this pattern has been present before the beginning of every bear market since 1896. Now, the NQ has powered the markets higher after the March 2020 bottom. But as of October 26th, so these charts here were all put up here and posted as of October 26th. Now we know the day out here, 2020. The weekly chart had already generated a Rhodes Momentum Indicator top. See, price was moving higher out here, and it was this shooting star candle. That's a bearish reversal candle, by the way. And then it was followed up by another bearish reversal candle, the bearish engulfing candle. And on October 26th, the NQ was trading below the oscillator and change line out there. So on a weekly basis, the NQ has signaled a top-end pattern, a valid Rhodes Momentum Indicator pattern. So here's what we've learned during this last segment. Rhodes Momentum Indicator pattern present before the beginning of every bear market since 1896. RMA tops form when price moves higher with less relative strength. RMA tops are confirmed with bearish reversal candles. Bottoms are confirmed with bullish reversal candles. And when price is moving lower with less relative weakness out there, it's a 5-step process. You can learn the exact details. And it's not going to teach you, I'm not going to teach you this in 5 or 10 minutes, but in this 1-hour workshop, you will be able to master the Rhodes Momentum Indicator pattern out there. And how you do that, you subscribe to Mastering Probability. You're going to get access to all of these workshops as well. You're going to get a 14-day free trial to my newsletter service. You're going to get the workshop, 5 Reasons Traders or Investors Fail to Spot Bear Markets, the oscillator and change line. We've just briefly mentioned that, the ultimate trading signals, Japanese candlesticks. It's an absolute must. The TD9 count and the advanced decline oscillator. We won't cover the advanced decline oscillator today. You get a 90-minute money management workshop. You get direct access to me to help evaluate some instruments that are in your portfolio or help you with exits or entries into positions. So another essential marketing tool, or timing tool, market timing tool that I use is the oscillator and change line. I refer to it as OUL. Sometimes I refer to it as Stevie's green line or Stevie's red line out there. The oscillator and change line lets us know whether the price oscillator is rising or falling. Now, a rising price oscillator above zero is bullish. A falling price oscillator below zero is bearish. So the price oscillator is down here on the bottom of my screen. So again, a rising price oscillator above zero is bullish, and a falling price oscillator below zero is bearish out there. Now, the price oscillator measures the difference between two things. In this case, 2 moving averages. For our calculations, for my calculations, we use the 19 and 39 period exponential moving average. Again, a rising price oscillator above zero says, do not be short. And a falling price oscillator below zero says, do not be long. A really, really cool tool. Now, this tool is not going to identify Rhodes Momentum Indicator tops or bottoms. Those are going to be leading or advanced warning systems out there, kind of like the super Doppler out here. But generally speaking, when prices, when price is above a green line, so the green line, so just to help you with the colors, if you haven't already noticed, the line turns green when the price oscillator, again, the difference between the 19 and 39 period exponential moving average is above zero. And then I have it turn red when it's below zero. So when price is above a green line, it tells us we have a rising price oscillator. It's called the oscillator unchanged line. Well, it would be unchanged if price was right at that number and our price oscillator would be moving sideways. Again, I've got a workshop that will take you through in detail this line, how to create it, how to use it, what it means, and a price oscillator. So as I mentioned here, a price oscillator, it's the difference between 2 moving averages, and the 19 and 39 are really important to use. Use those two. We use exponential moving averages, not simple moving averages. And again, when the price oscillator is rising and below the zero line, price is rising, but it may just be a counter trend rally. When the price oscillator is rising and above the zero line, a strong bullish trend is likely underway. When the price oscillator is falling and above the zero line, prices fall and price is falling, but it may just simply be a retracement back up to that oscillator and change line. You'll know better, you'll learn better, you'll see better when you actually do the full hour workshop out here. And again, you gain access by going over to Mastering Probability and taking the opportunity to use that 14-day free offer. Now, another key pattern that I'd like to unlock for you today is what I refer to as the TD9 count. And this is a great pattern for identifying potential tops and bottoms. Plus, it provides us with real key levels of a breakout level of support and a breakdown level of resistance. So welcome to the power of 9. This is the weekly chart for the S&P 500. And the S&P 500 made a top the week of September 4th. It is this TD9 count pattern. Again, on my screen, these things are automatically already built in here. And the TD power of 9, it consists of 9 consecutive closes less than or greater than the close for trading bars early. Depends on less than or greater than, depending on whether price is moving higher or price is moving lower. Now, when a 9 count forms, the market typically experiences one of 3 things: either a trend reversal, a little bit of a price hiccup, or a consolidation period commencing either the bar before, the bar of, or the bar following the completion of bar number 9. That means you and I are focused on bars 8, 9, or the bar following 9. And we're always comparing close versus close. This is Tom DeMark's book. If you read you can get this on Amazon, New Market Timing Techniques. It's a very technical book out there. The TD9 count pattern also generates for us breakout support and break down resistance. The resistance lines on my charts out here are in green. The support lines are in red. This is the euro US dollar. As of today, it's still trading in between support and resistance, the TD9 support and TD9 resistance out there. Now, the TD9 count pattern is comparing the current bar's close to the close of the bar 4 bars prior. So the close of bar 9 is taking a look at how that closes compared to bar 5. Bar 8 versus bar 4, 7 versus bar 3, 6 versus bar 2 out there. So the power of 9 lets you anticipate the power's next move. As bars 8, 9, the bar following 9 form, you can anticipate that next move in the market out here. Here we're taking a look at the Russell 2000 2-hour time frame chart. And we can see a bottom over here on the left around October 15th. That happened on the bar following bar number 9. That low was never closed below. Where did price rally? Price rallied right up into TD9 resistance. Never closed above it. It closed above it for 1 bar. Stevie has a rule. You need to see 2 closes, 2 bars above resistance, 2 bars below support. Price can't bust through resistance. What does it do? It moves lower. And when it moves lower, what does it do? It forms a TD9 count at the bottom. In fact, you had another TD9 count back here in October. The TD9 count is an extraordinarily, in fact, here is, I'm going to pull this chart over. This is the Dow Equity Future Contract. And the Dow Equity Future Contract is the one for us to really be focused on over the next couple of days out here. This, I don't have the TD9s on here. I just simply have for you the breakout support and resistance. Had we received 2 closes below 29.010, and maybe if we get those overnight, you're going to want to watch this 29.010. But as the market was pulling back today, all that the Dow was doing on a 2-hour time frame was testing its key breakout support level. If price closes below this 29.010 level out there, then that's going to open up the door to move down to the next area, and that's 28.104. So here's the TD9 count pattern in operation, live chart. For the 2-hour time frame for the Dow. And the number, write this down on a pad of paper you want to watch, 29.010. If there's 2 closes below that this evening, that is telling you that we have a change in trend for that 2-hour time frame out there. So I've got an archive workshop. Tom DeMark set up 9 count and the advanced decline oscillator that walks you through in detail this extraordinary powerful pattern. Again, you get that by signing up for the 14-day free trial. There's a question, does this work on smaller time frames, 5 minutes, 3 minutes? And the answer there is it absolutely does. Now, Mastering Probability, the newsletter, and you get this twice a day typically. You receive a newsletter in the morning by about 9 o'clock in the morning. It's going to cover what took place overnight, what's going on in the futures contract, what to anticipate for the day. You then get an end of day, Monday through Thursday, an end of day report that will also help you to identify what to be looking for overnight and what just took place. Now, inside the newsletter, I'm tracking all kinds of instruments out here and making you aware of Rhodes Momentum Indicator tops, TD9 count signals that are present. Here's an example. This goes back to, I think this was back on October the 26th, and showing you the different signals out here, daily, weekly, monthly, TD9 counts, the whole 9 yards out there. The newsletter provides us with market outlook conditions for indices, for ETFs, for sectors for the S&P 500, the Dow 30, and many more out there. And it's telling you about the current market conditions, where our support and resistance levels are, and what type of signals we have. I've got this for the GDX, for most of those components and some of the popular ETFs out there. I've got this for international instruments, most wealth managers. If you are managing your long-term portfolio, you will typically have this in some percentage allocated to U.S. equities, to foreign equities, to fixed income, to real estate, commodities, master limited partnerships, and some other things out here. But this is helping you understand those conditions. If you're invested in foreign equities, I provide you with a full table of what's going on worldwide, so you can see which markets are bullish, which markets are bearish, where support and resistance is. So I cover the whole 9 yards. So in summary, I've got your back. The newsletter has your back. This will help you to understand what your instruments are doing. It'll help you with your long-term portfolio. This will help you understand what's going on with the current message of the markets. All I do each day is just narrate what the technical tools are communicating to you and I. That is all that I do. And then from there, we go ahead and take those signals. So those are the tools that are used by me, Steve Rhodes. I would love to be able to teach you those tools out there. And the easiest way to do that is to sign up for Mastering Probability. If you've got questions, feel free to reach out to me, Steve at Mastering Probability. If for some reason you don't get a response within 24 hours, please get back in touch with me, because I always respond back to folks within a 24-hour time period out there. And now would be a great time to take any questions. I'll just quickly look back through the questions that we have out here. What is a market timer event? So a market. So again, I think I mentioned this. Timer Digest is an independent organization, and they track the performance of different market timers around the globe out there. So just a third-party independent organization. No, 2020 had more than so bear market. So when we use the term bear market, it means a correction of more than 20% in a year. And we've had more than a 20% correction from the highs from February down to those March lows. So that turned out to be a bear market correction in the market. With regard to this year, one of the things to really pay attention to, if you give me a moment here to pull up a chart here, what we're really going to focus on is the Dow. So this is a current picture of the Dow here. And when we take a look at the current candle, if the Dow finishes one tick below the open, by the way, this year's open for the Dow is 28,638.97. One tick below that will generate a key reversal bar. And if we get a key reversal bar, that is a bearish reversal signal out there. And that could be our signal to see continue to see a 2-year correction. The last time we had a key reversal bar, see if I can do this by moving this over here, was back in 1973. This is the last time we had a key reversal bar. That led to a 2-year correction. So that's one of the things that we're really going to be paying attention to. Let's see, a question. Does stochastic provide similar info as a relative strength index? It does not. If it is similar from a momentum standpoint, but oh my goodness. You really don't use the stochastics for the Rhodes Momentum Indicator signal. So I'm not saying don't use stochastics. I'm just saying don't use stochastics with regard to my pattern out there. With the trial period, how do you take advantage of the yearly price? Can you sign up for a year? You can sign up for a year with the 14-day free trial. If you sign up for a month, you can also upgrade to a year, before you're 14, or anytime really, you can do that. So that just simply gives you those options. The cost of the service, it's $149 a month, or the 6-month or yearly program give you substantial discounts. Is the TD9 indicator available? No. Well, I don't know if it is available. I built it myself. In NinjaTrader. You too can do the same out there. And I walk you through that workshop. Will walk you through exactly what it is that you need it done. There's not anything This is the beauty for each of you that are here. There's not anything that I'm not special. I wish I were, but I'm not. The tools that I use are special. And the tools and the power that NinjaTrader offers us, that's special. And then it's just a matter of learning how to read those things. Well, that's what I do. I walk you through that and you got thousands of hours worth of just daily radio shows where you see my NinjaTrader charts and you see the patterns out there. So it is really relatively simple out there. So I think we're getting towards that time period where I'm supposed to be done with the workshop. So that's a beautiful thing. And I know we ran through this stuff in relatively fast order out there, but this was my ability to be able to give you an overview for these tools out here, but more so really say, hey, look, I've got your backs. You can learn these tools for the next 14 days. Look, if you don't sign up for it, it's not going to change my life. It just might change your life by not doing that. I mean, the ability to understand what the markets are doing on any type of time frame, such as this afternoon, and taking a look at those signals out there. So I mentioned, let's go get a feel for what the signals are coming from in the markets. I mentioned that we took a look at the ES Mini out here. I'm sorry, did we take a look at the ES Mini? I think we took a look at the ES Mini. Here's the Dow. So here's the Dow equity future contract. This formed a Rhodes momentum indicator bottom. Here's your bullish engulfing candle. What should we expect overnight? Price right now is trading above 20. It's really trading right at resistance at 29.062. So when the market opens back up in an hour from now, if the Dow equity future contract begins trading above 29.062, you should anticipate that price is going to make its way up to its TD9 resistance level. This is the 30-minute time frame. That's at 29,359. That is where price should head to. Now, if price is trading above 29,359, that's telling you about on the 30-minute time frame, a change in trend to the upside, and it may signal that we go back and we revisit Monday's highs out there. That's coming from the ES Mini, so from the Dow. So we got a bottom that formed in the ES Mini, a bottom that formed in the Dow equity future contract. Let's take a look at the NQ right here. And on the NQ for the 30-minute time frame, what you're going to see is a TD9 count bottom. Didn't generate a Rhodes momentum indicator bottom. It did up at the top here. So if you were wondering this afternoon, what was the market doing? And you're looking again intraday to understand its signals. Here's the Rhodes momentum indicator signal, shooting star at 11 o'clock this morning. Would this have helped you if you are that type of intraday trader out there? My answer is, it absolutely would have helped you. Would this have helped you knowing that at 3:30, bar number 9 of a TD9 count had formed? And to either tighten your stops, anticipate that a bottom was going to form, especially when you saw the Rhodes momentum indicator signals forming inside the ES Mini and the Dow equity future contract out there. So that's really what we take a look at. Key level of support held. That was the Dow 29,010 level. Asking for a promo code. Is there one? No, there's no promo code. Rich, just go ahead and sign up and you'll be all set. And anybody, if you've got any problems whatsoever, just reach out to me, Steve at masteringprobability.com out there. That's probably the easiest way. Yeah, Leon says, Tom DeMark in his writings indicates that the RSA does not really measure relative strength. Aren't you really following a MACD? Yeah, it is a MACD. It absolutely. But now the MACD tool, just so you know, that if you use that tool properly, that uses simple moving averages, and it uses 12 and 26. And so you don't want to be using that. But yes, you can use the MACD tool to create that price oscillator that was at the bottom of the screen out there. So good point, Richard. Thank you for pointing that out. That was Leon. I apologize. That was Leon that pointed that out. Any other questions, folks out there? Any other questions? Anything you need me to pull up, take a look at while we have a minute or two? So question here from Sean. Question, don't you think the S&P, if the next Fed stimulus package comes out, even though if we break below support level in the next day or two, once the stimulus is out, markets will bounce back and be bullish? That's a possibility. there's all kinds of possibilities. When we take a look at charts out here, what we're never able to do is hover. What I can't do is hover over a candle and know what happened. So instead, Sean, when I go back and I take a look at charts historically and I understand where charts ran into resistance or support and the patterns that are out there, it's the patterns that really are signaling to us what's going to take place. Because Sean, you asked that question. And so if you're thinking that, maybe there's many other people that are thinking that. Why can't that be a sell the news event? It could. So I just trade by the numbers. I trade by the numbers out here. And what I could share with you, Sean, is that if the Dow closes below 29,010, we have a change in trend signal on the 2-hour time frame. And that price would target 28,104. Now, what we would have to do in the interim is we'd have to look for any type of bottoming signals that are coming from the 2-hour time frame chart to help us identify that a bottom might form below 28,104. But right now it's held. So, there are so many things that influence. Remember, global capital is always trying to understand. It's always evaluating taxation. Right. So let's take a look at our potential new administration. What have they signaled to you and I about taxation? What have they signaled to us about the energy sector? And so many different things out there. I'm a pattern recognition trader. And here's one thing that I know. Every single bear market in the Dow since 1896 has had a Rhodes Momentum Indicator top. Period. End of story. And so it is a extraordinarily valuable pattern to use and understand, and it will help you to be able to understand the message of the markets, what buyers and sellers are communicating to you and I. And that's what it's all about. If we get rid of all the other noise and we just trade the patterns, we'll be just fine. So I'm currently using 2114 EMA, 2000 candlesticks, and buy and sell volume. Can this be used on Forex? Yeah, it's used on Forex. Here are my, I'll pull over some Forex charts for you just to give you a feel. I'd mentioned we put a chart here for the euro. So give me just a moment here. We'll take a look at the daily time frame charts here.
And Steve, let's go ahead and wrap up in about 5 minutes.
You got it.
Thanks.
So here are the here are the currency charts that I follow. When I say currency, so he didn't indicate which currency pair, but here is the Australian dollar. I don't have any kind of a topping or bottoming signal out here. I do have a topping signal up here. It was wave number 7. We didn't get into talk about that, but if you subscribe to the newsletter, you'll understand that tool as well. Here's the Canadian dollar. I don't have, so if we're wondering where's the Canadian dollar headed to, its target is going to be its TD9 breakdown level at the 134 level. If we're taking a look at, I'd mentioned the euro. Here's the euro. Here's its trading range right now. Resistance up at the 118 area. We can see how that level was hit just a few days ago. This was after the chart that I had inside the presentation out here. So price in the euro is consolidating between TD9 breakout support and TD9 breakdown resistance. Here's the US dollar index chart. This created a Rhodes Momentum Indicator bottom back here in September. This led to an A to B equals CD to the upside, another pattern that we didn't get a chance to talk about today, but I will teach you this out there. So yeah, the answer is yes, it works for everything. How do you calculate support and resistance levels? Again, we're looking at TD9 support and resistance out here, Frank, and all that will be covered in the workshop. As you subscribe to Mastering Probability, it shows you exactly. Look, somebody asked me recently, they said, why would you share all these great tools for free? Why would you do that? I love music. I don't know if any of you love music, but I'm originally from Detroit. I've been going to concerts ever since I was 13 years old. I've seen so many concerts, so many groups out there. One of my favorite bands, I got to see them live a few times, was Queen out there. I don't know if any of you saw the movie Bohemian Rhapsody, but I learned something new about Freddie Mercury. Now, and it was the message that his father had taught him. And some of you may have seen it, and you may know what it is that I'm about to say. But it touched me and it influenced me for sure. And it's the reason why I am willing to do what it is that I'm doing here and giving you this information here that took me decades to figure out and put together. And his father Mr. Mercury taught Freddie good deeds, good thoughts, good words. It really was good thoughts, good words, good deeds along those lines out there. And really, that's just simply a lifestyle decision. But for me, that's what it's all about. These patterns work for every time frame. So it's not like we're all going to be looking at the same pattern, the same instrument, and things of that sort. So that's the workshop. The website out here, it's Mastering Probability. I'll put the link here in the, give me a second here. We'll put the link in, and you'll have this right there. So there you go. And I want to thank each of you for attending this live event. Stick with NinjaTrader. It is a great product, And that's it. So thanks so much for attending. And I'll turn it back.
Perfect. And I did see that you sent that website URL to just me. So I went ahead and resent it to everybody.
Oh, sorry about that.
Perfect. Well, I would like to give a special thank you to Steve Rhodes of Mastering Probability for a great presentation today. Everyone in attendance here will receive an on-demand video recording of today's event, so just keep an eye open for that email. NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope that you will join them on a regular basis. We would like to remind you the information provided in this was of Mastering Probability and not of NinjaTrader. All of the information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader ecosystem. And again, thank you so much, Steve.